Today, the bull trap syndrome. Hello again, it's Martin North from Digital Finance Analytics, world's latest post covering finance and problem news with a distinctively Australian flavour. Today I'm joined again by Tony Locantro from Alto Capital. Hello, Tony.
G'day, Martin. It's been a while again, but I just thought the time was right to get on the show again.
Well, it's good timing. I think there's a lot going on. And what's interesting, if I look at my mails and messages, is that there are a lot of people saying, oh, this looks a little bit dodgy and a bit wobbly. And in fact, I was talking to an investment manager yesterday who say he's pretty much out of the stock market in Australia at the moment because of some of the risks. So it's a really good time to try and get a read as to what's really going on and perhaps put some people's minds at rest. Maybe, maybe not, but at least talk about some of the things that are going on.
Yeah, I've been watching your channel lately, and a lot of it's been chart driven, which excellent charts and content. And I think I need to take a more human approach with what's happening in families. And on a serious but sad note, the murder of Hannah Baxter and her 3 children. Very sad, but it just shows that someone with the traits of a gaslighter can snap like that, and no doubt in financial stress as well. So you've got suburbs full of people with large mortgages tiptoeing through the tulips, yet there's some trigger points, and sadly I think it's going to be the recession is going to trigger a lot of domestic violence, a lot of social issues. The world's gone too PC. Like if you see a tree that's going to kill someone on the side of the road, they've got to protect the tree. Or someone's importing cocaine in pots on border security, they're scared to cut a hole in the pots. It's just complete bullshit, Martin. That's very sad. And I think this is going to bring some issues to light. And it's only a poor economy that's really going to highlight what's going on.
Well, I think you're making a really important point about the social consequences and the social impact. You know, John Adams and I talk about this quite a lot, and we've been talking with the guys in Ireland too, because, you know, this is not just a dry economic debate or a theoretical financial discussion. This is real people with real issues. And as you say, in the context of a probably wobbly economy, things can go bad, and they can go bad quite quickly.
Well, you look at people that thought, well, their path to riches was Gloria Jean's or a Michelle's patisserie or a Jim's cleaning or gutter cleaning. The franchise model is broken. Absolutely broken. The opening up a cafe and employing people with tattoos and blue hair is broken. The model is broken. Wealth through simple inertia is over. People are actually going to have to think for themselves. And sometimes the best time to panic is first.
Yeah, well, you make a really interesting point there about the franchises. We survey businesses, of course, in our business surveys, and we've seen a lot of pain coming through. And a lot of the franchise businesses in particular were the first ones to actually indicate real issues. And it's simply because a lot of the things that they were involved in were effectively discretionary spend categories. And so when people don't have the money, they stop spending. Good example, somebody was driving around in a franchise dog wash service, right? So they'd rock up at your house, shampoo your dog, charge an arm and a leg for it, and then go away again. 2 or 3 years ago, they were actually working 6 days a week. They're now working 1 day a week, and there's no money. So, people are washing their own dogs.
Well, there's nothing a hose can't solve. So
spot on.
Yeah, but interestingly, when you talk about retail, I did the walk from Hay Street, Subiaco in Perth, down to the Hay Street Mall in the CBD, and there's more gaps than a junkie's teeth emerging in Perth. I don't know what they're going to do with the gaps. Retail's dead. I've spoken to people around Leichhardt. They're even saying that Leichhardt's dying. Once, a traditional Italian area with lots of restaurants start to die, we're in some deep shit. So I saw a housewares company go under today, Ishka, from memory. Housewares, like I've seen houses in Perth decorated with Kmart cushions and throw rugs. So why the hell are you going to pay $100 for a throw rug where you can buy it for 10 at Kmart? These businesses, I mean, it's like owning a Blockbuster store. Times change. You've got to be nimble, but certainly the retail model is broken. I mean, I was walking around David Jones in the Perth CBD, and there was more staff than customers, and it resembled a morgue. So you've got all these leading indicators that are largely being ignored, and I don't know what's going to happen with these gaps in buildings. Do they border them up? I saw them put a pop-up dance machine in NX building in Perth, and that shut down because even though it was free, who the hell's going to go in there and dance?
Mm. Well, one of the things I've noticed here locally, because we've got a lot of vacant shops in and around the Wollongong area, and they used to be able to give them short leases out to second-hand bookshops and remaindered this and. But even those now are actually not able to make it work. So we've got more and more and more empty shops. And again, we see the same thing. The number of people walking around definitely going down. The economic ice age has really come into retail. And the issue is that there's no indication from my surveys, nor indeed from any other information, that's going to change. If anything, as wages continue to be compressed and as the broader economic scenarios look, even worse, retail is going to get worse and worse. And there's a cascading effect as a result of that, I think.
Absolutely. Well, opening up a cafe or a restaurant is pure speculation. You're speculating. It's like farming without the concerts and the handouts. So, I mean, if you're going to open up a cafe in Leederville, WA, if you're not good enough, you're Gornskis. And I just think this is a great retail contraction we have to have. There's too many speculators. Now people are going to cut out the second coffee. It's actually quite nice to stay at home with a home-cooked meal and actually talk to your family once they've put their phones away. So this is a definite move towards the 70s lifestyle, hopefully without the stagflation.
Yeah, well, you're right. And, people seem to be cooking more at home and, going out less. And, I also think that when people are committing funds to go buy something, they're much more cautious about the price they're paying and the quality of what they're buying. So, a few years ago, they'd have bought, expensive crap and not worried about it. But now if they do buy something, there's a long, slow, careful consideration before they actually go after it. And I think that change is quite remarkable.
Yeah, well, the whole mindset of the consumer is changing. And I just hope we adopt the Irish model, not the Japanese, save everything and have, I think at one point the average Japanese person had $106,000 in the bank and they were too scared to spend. So I'm hopeful we only get an Irish style collapse.
Well, it's worrying if we think there's an Irish style collapse is actually, the least worst option that we're facing. That's scary in its own right, Tony.
Well, we're rooted either way. And I was in Dublin in 2010 and front pages were littered with school teachers in negative equity. They couldn't move. They couldn't sell their house. Yet, in 2012, Irish house prices started to recover and they've just had 7 years of positive growth and 2019 was the first negative year. So it can recover. They still have their sense of humour, but I just think that's the economic detox we have to have.
Yeah, well, let's just touch on property a bit then, because of course, the headline news, if you read all the newspapers, is we're in a property boom, the prices are recovering, buy now because you're going to miss out. So the fear of missing out, they say, is back. Although, of course, Domain reported their results today. They were about 12% lower than last year. And interesting, their listings were down 12% compared with the previous year. So I wonder to what extent this is spooking rather than reality.
Well, at the moment, the apparent house bubble, I call it a Clayton's rally. People old enough remember that Clayton's was a drink you're having or you're not having a drink. What a brilliant advertising pitch. But this 12 times price to income is the biggest load of shit I've ever seen. Now, why would you pay 3 times the long-term average to live, 60 kilometres from the beach in Shitsville? Admittedly, all the houses have this brown facade and it's same. And all you're doing is buying an asset that's going to drop 40% in value, and you're exposed to interest rate risks. I can't believe those domain ads during the cricket. The cricketers saying, oh, real estate on the Sunshine Coast is hot. I mean, if I did that in my business, I'd be in jail. I mean, the compliance I have to go through. Now, all these cheerleaders, especially Stephen Koukoulas, obviously do not have enough stock market knowledge to address this housing bubble, because the housing bubble is like the end of .com, the end of baby powder. This hand sanitizer bubble is going to end in tears as well. I've seen companies go from 8 cents to over $2 because they have disinfected. Viewers would have noticed the increase in Pinaclean and Glen 20 ads as well. So they're cashing in. They're cashing in on fear. So at the end of the uranium bubble, everyone was backdooring in shitty uranium assets in dodgy countries. Well, that's what the housing market is like, and it's broken away from the reality of the economy, as you stated in your live show.
Yeah. Well, let's just dwell a little bit more on the so-called bull trap, right? Because I know people bandy it about a bit, but there's actually quite a serious psychological aspect to it, as well as actually just an economic aspect, isn't it? Because basically you start with prices begin to rise and people think they're going to go higher, and then people are concerned they might miss out and essentially pile in, and then all of a sudden it turns turtle and goes the other way.
Exactly. And the trajectory of the downfall would have, if it continued, I would have easily won the bet with Koukoulas. Then suddenly you get the Labor lose the unlosable election. We then have another interest rate cut. Prices start to recover. Mainstream journalists and economists, those former economists that think they're funny, are now spruiking that this is a new paradigm for housing. What a complete load of bollocks. You look at rental yields, gross yields in Bondi, they're down to 1.8%. I'd be happier with a Bank West term deposit at 2.35 on an asset that's going to fall 40%. So these people that are trying to adopt a housing growth story are wrong, because it's like the tulips and it's like every other stock market bubble. And I see markets as a collective of 99% of the population with NFI what they're doing, and prices, you've got to be opportunistic as to the prices.
Yeah, well, certainly I think some of the people who are talking up the market are using some very specious arguments. The one that I think is most interesting is this, affordability is much easier because interest rates are so low, forgetting, of course, that people still have to save for a deposit, and they still have to repay that very large mortgage over 20 or 30 years, because it isn't just about repaying the interest. You've got to repay the capital. So if you're in the situation where you're taking a really big mortgage, and as you say, with the risk of prices sliding as well, you're going to be in a very uncomfortable position. And yet, a lot of people just say, well, interest rates are really low, so therefore you can afford a lot more. It's just so myopic.
It is, and people aren't pricing in the future. And probably the worst case scenario for some people is, if we do have a deep recession, we clear out the system, we deleverage, then suddenly interest rates normalise over 5 years and head towards the average mortgage repayment of 9.41%. Now, how the hell are you going to pay that off on an $800,000 mortgage on a house in the outer western suburbs of Sydney worth $500,000? So not only do you have $300,000 of negative equity, you're also paying $75,000 a year in interest, which is the equivalent of a highly paid job. That is the economic equivalent of being sandpapered to death. And I think there's going to be at some point where they're going to have to adjust the bankruptcy laws. Absolutely. And what will happen is, if you watch A Current Affair at night, Tracy Grimshaw, instead of talking to heavily tattooed bogans because they seem to be more fun on TV, this will start to move to the middle class. And the way I see it is the bogan class in Australia are insulated from what's happening. They're only concerned about the price of Maxwell House coffee and getting the sugar out of it. They're only concerned about poker machine limits and the price of cigarettes. So they're insulated. They rely on Centrelink. Their payments are adjusted. The ultra wealthy, like you look at what Bezos just sprayed for a house in LA, 176 million. So he's just shown himself to be a typical rich guy. I don't know how many cleaners he has to employ. But it's the SUV driving soccer mums in the middle that are going to get pretty much wiped out if the economy and interest rates start to normalise. And the first thing will be the Audi Q5. Then kids will get yanked from private schools, and you'll see more demand for public schools, which are actually increased in popularity and quality of education. So it's pretty much the wipeout of the middle class is slowly on its way. And I mean, I can't believe people can't see it.
Well, it is interesting, Tony, because I see that in my mortgage stress surveys, right? You know, you always find you've got the battlers on the suburban fringe who always are in difficulty, and you know they remain so. But what we're seeing is as you say, it's those further up the socioeconomic scale, the ones who actually have a bit more income coming in, who have been relatively insulated up to this point. But that's actually where a lot of the growth in mortgage stress is, and it's simply it's just arithmetic, right? Money in, not going up; money out, definitely going up. Therefore, crunch. And part of that crunch are the big mortgages. It's also the other lifestyle aspects, you know, school fees and those sorts of things, healthcare costs. All of those things are accelerating. And so what we're seeing is a lot of these, people in that middle group are now beginning to cut back. They're cancelling their health insurance. They're taking the kids out of private school. They're trying to sort of dial back their expenses to try and fit it within a much lower financial profile. And they're finding that really difficult. And in many cases, even when they've done that, they're still underwater.
Well, yeah, I look at it in around 2015. I started making these calls. And even though there's been volatility, the house median prices are still about the same. So people have paid 4 to 5 years off an asset that's likely to drop 40% in value. And to me, that's a waste of one's life. I don't know. It's this ingrained misconception that you must have a huge mortgage and you must leave it to your kids. You're better off being broke, getting the pension and getting shoved in aged care without any assets, and the government will look after you. Why these stupid misconceptions? Why are Australians delusional that Sydney should be the second most expensive real estate in the world when we're close to nothing, and we, on stock market globalisation basis, we're 2.4% of the world economy. People aren't going to come here due to the bushfires. It's absolute disaster when we're relying on gullible tourists to buy shitty souvenirs and go out and spend all their money. We are probably the most delusional country on earth at the moment, and it's really sad to see. And the average Australian reading Domain, News.com, Yahoo Finance is being led into financial oblivion. For what price? To prove me wrong? Kukulis wants to prove me wrong. I'm actually happy to lose that bet because I'm happy that he's on the other side of what I'm seeing, and the only thing that's going to happen is the timing, Mark.
Yeah, well, I think that's right. And I think it's just worth reflecting for a second on the close relationship between the real estate sector, the media, and the finance sector, right? Because, of course, they've all got this deadly embrace now. So if you look carefully, you can actually see the alignment between the real estate operations, the finance operations, and the media operations. So they're actually all on the same side of the fence. And so you don't get an objective view of what's going on because, of course, they're all trying to talk the market up in a particular direction. And my own view is that the level of disclosure about those relationships and the incestuous, connections that are going on there are not just disclosed anywhere, but they should be. And that's true whether you look at Domain or if you look at REA, right? So they're basically both connected to the media. And, they've also got finance interests as well in there. Now, people don't know that and people don't understand that. So when you actually read stuff in the paper, you do need to ask, what is their agenda, right? Rather than just assuming that the pure truth is being portrayed there. And I have to say, I don't know whether you saw, but last week ABC did a series in their 7:30 slots looking at the property sector. But I thought that was, again, very, very one-sided in terms of the way that they told the story. And, it was more about the fear of missing out and all those things. And again, there was a whole underbelly story which should have been told and wasn't told about the financial pressures and all those things there. So we're not getting a lot of balance. And then if you think about it from a political perspective, basically both the Treasury and the Reserve Bank is saying we need to get people to spend again because we need people to actually support the economy. To make them spend again, we need to give them a bit more a feeling of wealth. So therefore, if property prices go up and people can borrow more, then you get that wealth effect, and the wealth effect means they're going to spend more, which means we get an economic outcome. So essentially what it says is we're banking the whole of the future of Australia on higher home prices and more household debt. And yet, if you stand back and think about it objectively, as you said earlier on, very high debt, very high risks. And then we've got the global context of not only the Fed continuing to support the global financial system through the repo operations and through their build purchases, but then you've got the coronavirus there in the background too. And you're thinking a realistic, objective view of what is going on would not be as positive as all of that spin that's out there. And then it flows over into the stock markets, which of course are hitting new highs again. And you think, what world are we in?
It's crazy. And when you talk about spending, I remember when we had the needles in the strawberries, when all these people copycat. And then I went out and would buy 2 punnets of strawberries to support the strawberry farmers. Now, once things go negative, sentiment comes off, all bets are off because it's every family for themselves. And if you go and look at individual balance sheets of families, they are seriously struggling. There's been no wage growth. So in 1995, wages and house prices disconnected. And that was worrying, because how can you have wage growth without serious inflation and a rise in interest rates? Because interest rates will be increased to curtail inflation. People don't understand it. It's basic economics 101, Stephen Koukoulas. He was saying it's supply demand. Is there a bigger load of shit? That's just like an ugly person saying that beauty's on the inside. I can't believe that we're led down that retarded path. Now, Australia's gone full retard. So, yeah.
Well, it is there. It is unfortunate. Luckily, if anybody who watches DFA and a few other channels will get a different story, right? We're trying to be a bit more objective and independent about what's going on. And, the bottom line for me is that I think households should be really cautious. I'm interested that only half of the households that I touch through my surveys have any idea of what their money coming in, money going out is. Many of them don't know. So I always say, drop a cash flow, start some prioritization, work out where the money's going, and then begin to actually, craft a strategy around that. There are things that people can do, but the true reality is that if you're banking on the property sector to be your lifeline, that really is, I think, grasping at straws.
Yeah, I looked at the long-term chart of real house prices. So those that, if you bought in 1890, it took to 1963 for real prices to break that baseline. So we've had these massive rise. It has to correct. But what happens if you have 10 to 20 years of no real house price growth? There's no wage growth. Interest rates reset. It'll be a fire sale of properties that no one wants. The age of consumerism is pretty much over. I earn really good money. I'm not ashamed of that, Martin, because I've been floating medical companies that are making breakthroughs to improve human lives. I also raise money for mining companies that employ people and pay a shitload of tax. But I'm penalised by the Child Support Agency for being a hard worker. And it was funny, I got a call last week. I've been paying my first wife $3,000 a month for my kids. And the Child Support Agency rang up and said, oh, you're owed $36.13 a month now. So I'm getting, to support my son, I'm getting less than $9 a week, and the whole system doesn't reward hard workers. I'm not ashamed of it. I live a very simple lifestyle. I hate consumerism. I'm not going to buy handbags for my girlfriend. Stuff it. I mean, it's bullshit, and you're trying to keep up. And I think once that mindset goes, our economy, which is 58% driven by the consumer, is Gonskis. It's finished. It needs to reset.
Yeah, well, I've said a few times the Alt Control Delete is not far away. Not quite sure when yet, but I think the messages really are quite clear, and therefore beware of the bull trap, beware of all the spruiking, and just be cautious, be careful.
Absolutely. And I mean, I've had coffee with some of your viewers, and they're lovely people, and they're scared shitless of bailings. They're scared of their superannuation being touched. They've all got hundreds of thousands of dollars of physical gold and physical silver. I heard your point about silver where the government can't take it. Silver, to me, is the best commodity you can have, because at some stage that price is going to be manipulated in a northeasterly direction, and when it increases a few 100%, sell the bloody thing, and then houses will probably be affordable and will make sense. Perth has been declining for 6 years. There's no excitement around Perth property at all, and still on a historical basis, we're still expensive. But some of those outer fringes where the bumblebees live, and they own a HSV and an FPV, they're in a world of pain, and it's only going to get worse.
Yep. Well, we did a show last year on Mandurah, and that's a classic example, right, of 30% down on property prices, very high levels of mortgage stress, high levels of default. And what I say to people is, if you want to understand how this could be, look there, and then run the clock forward, 2 or 3 years, and you'll be seeing those same social pressures, the issues around low prices and people effectively losing their shirt, much more widely spread. And you heard it here, we warned, but people will still be surprised when it happens.
Yeah, you're doing a really admirable job, and your viewers are certainly grateful. One of them in Melbourne said that she goes to bed with you every night. It's a good addiction to have, rather than watching Married at First Sight, where you've got a bunch of Botox people with bad acne vying for a guest appearance at Carmen's Miranda. It's a sad world when Australians are fixated on bullshit, B-grade celebrities, when our economy, the foundations have gone. Our house prices are trading at 12 times our miserable wages, and it has to correct to around 6 times, and it's still expensive. That is scary shit, Martin. And I just hope viewers are taking precaution.
Yeah, well, Tony, I appreciate your time today, and we will maintain our beacon of light and our beacon of truth because we think there's a really, really important story to tell. So thanks very much, and I'm sure we'll catch up again down the track.
Certainly. Look forward to it, Martin. Thanks again.
Take care. So there you have it. As always, Tony's unvarnished truth, but I actually think there are some really important messages. I'm Martin North from Digital Finance Analytics. Many thanks for watching, and I'll see you again next time.